Welcome to the Money and Wealth Show. Brought to you this week by AmericanManganeseInc.com. Here's your host, Danielle Park.
Hello, today we're coming to you from the Agora Investment Symposium in lovely Vancouver, and it's my pleasure to have today a guest, Mr. Brent Cook, who's a geologist and renowned exploration analyst. I've known Brent for the last couple of years on the speaking tour, and you're speaking at the Agora Symposium, Brent?
I am. I'm looking forward to it as well.
And you write a monthly or weekly newsletter on basically mining and exploration investment opportunities. Is that that's
yeah?
correct?
What I do cover in the newsletter is mostly focused on the smaller or junior end of the mining and exploration sector, because that's really where the bang for the buck is, and that's what my history has been as well. I've been doing this for mining and exploration for 30-odd years now.
So you started out as a geologist, as a young buck right out of school, and were basically solely in the analysis of rock side of the business, if that's how you could say that.
Yeah, it's interesting. Most geologists, we come out of school and we're go out looking at rocks, spend all our time in the bush, camped out. I came into the uranium sector. That was booming in the late 70s and 80s, working in the Colorado Plateau, and then it sort of migrated from there to Australia. Spent 6 years in Australia looking for gold and tin and such, up into New Guinea, a bit into New Zealand, then moved back across to the Caribbean basin.
So coming out of school in the late 70s, I'm thinking of the commodities run, the secular bull in commodities in the 60s and 70s, and that sort of came to a crescendo not too long after that. If you started in 78? Yeah,
it did. Well, the uranium boom busted.
Surprise, surprise.
As all booms do. And then it picked up a bit into the gold sector, gold and base metals, and that crashed in the late 80s. And there was a period of pretty tough stretch there for a while, and then it picked up again in the early 90s, busted again in about 97, and then things picked up again in about 2001, where commodity prices and gold prices and that started rising, kind of opposite as the tech boom was collapsing.
So at some point you made the transition from being a geologist who analyzes rocks and trees for companies, I guess, into someone who began looking for investment opportunities and writing about that for investors who might be interested in the sector.
Yeah, it's interesting. There are two different aspects to this. One thing is interpreting rocks and mining and that sort of thing, and I did that up until about 97. But that doesn't really come into the side of actually selecting a stock or a junior stock and making money off a stock, which are two completely different things. And so in 97, I joined up with a fellow named Rick Rule as his mining analyst, and learned the hard way really quick that it's not all about rocks. It's also about the company structure, the people running it, timing, and those sorts of things. So it's been an interesting transition to where I'm now turning rocks into money. That's sort of my trademark now, is turning rocks into money.
It's interesting that you mentioned timing, because it seems to me that even within these long secular runs, for example in commodities, which we've no doubt been in now for the last 10 years, there's a lot of cyclical inputs that affect whether or not your investment timing is going to be rewarding or not rewarding. And so how has that changed the way that you write or talk about your analysis as a geologist?
I think at first, what you're talking about here is market sentiment more than facts. And market sentiment goes extreme, especially in the junior sector, which is high risk. When people are anxious to take on risk, they'll bid up a stock, and when they're scared, it drops. But the fundamental value in a stock, which is the rock part of it, doesn't change that much. So if you understand what you're buying, understand the concept that a company is putting forth in terms of their exploration and what it's eventually potentially going to be worth, you don't have to worry so much about those mood changes. And that's really important. That was a hard lesson to learn for me.
So in your investment newsletter, what sort of themes do you try and bring forward or recommend? How do you go about it?
It comes down to turning rocks into money. And when I spend half my time on the road looking at these projects, because you've got to see it to understand where the issues are, where the good and bad things are. And so that's kind of what we cover in the newsletter is, it's about what I'm doing with my money. I don't get paid by anyone to do this. no corporate, they don't pay me anything. I pick what I want, I go look at what I want, and I say what I want.
Which is important, right? I mean, this is an industry that's rife with conflicts of interest and people buying certain sorts of information, and you've made a point of maintaining your professional, objective view on things.
I think, if I was going to take advice, investment advice from someone, the best I could get is, what are you doing with your money? I would, that tells me more than anything else. If you're buying something with your money, that gives me more confidence than anything else.
Although sometimes people make catastrophic errors with their own money, Brent, as we've noticed. But we're going to take a little break, and when we come back, I'd like to talk to you more about some of the risks and opportunities you're seeing right now. We'll be right back after this.
Always consult your investment professional before making any investment decision. You're watching The Money and Wealth Show.
American Manganese, Inc. has a manganese deposit in Arizona. Indicated 6.7 billion pounds. Inferred 8.9 billion pounds. Potentially the lowest cost producer of electrolytic manganese. American Manganese, Inc. has a projected cash cost of 44 cents a pound. The metal trades near $2 a pound. Do the math. Trading symbol AMY. Visit AmericanManganeseInc.com or phone me, Larry Ray, at 604-531-9639.
The Money and Wealth Show is archived online at TalkDigitalNetwork.com. Here's your host, Danielle Park.
Hello, we're back with my guest today, Brent Cook, who is a geologist and exploration analyst. And Brent, before the break, we were talking about the importance of cycles and how that can impact one's success as an investor in this particular sector. So having said that, what would you say are some of the greatest challenges, perhaps, today as an investor in the resource sector and the companies that you're covering?
In the junior resource sector, there's over 2,000 junior companies listed just on the Vancouver and Toronto exchange. There's probably another 1,000 scattered across the world in, Australia and London and such. So the variety of companies out there and the choices are just overwhelming to the average investor. And I think you need to have screens, and those screens need to be geologic, and then you've got to look at company structure, and then who's running the company, management, that sort of thing. And to be honest, I think it's such a complex sector, mining and exploration and geology, and there's so many inputs coming into it and variables that you really should have someone, an advisor of some sort, that being a brother who's a geologist or a newsletter writer or your broker. I think that is money well spent for someone getting into this sector, because it is extremely high risk, and the potential there is for a 10 to 100 bagger if you pick the right stock. So it's well worth getting into. But
so something that I think of when I think about this particular sector is that back in 2007, people were talking about the opportunities in the commodity sector in junior mining companies. They'd been on quite a tear, made some wonderful gains for people. But I think it's very difficult for people to realize that a cycle comes to a peak. And so we had that sort of a big bottom in 2009, the spring of 2009. And since then, we've had, again, a big infusion of money into world markets on the back of QE and various stimulative things. So do you think that there's a fully valued aspect to some of these companies just sort of almost prematurely because of the infusion of capital into world markets?
That's a good point. And we're certainly seeing that happen with all the stimulus and quantitative easing, and that's coming into the fiat currencies. People are looking for hard assets to diversify into, to hedge their risk with the currencies, and we're seeing that coming into the commodities for sure. Gold, it's now $1,600 plus. That tells you what's going on, and it's been interesting to watch, and it certainly has been reflected in the junior to mid-tier mining companies as well. And that people are not across the board, but there are a lot of companies out there that are being valued for success. And the reality is, in exploration, your odds of success on any individual project are less than 1 in 100, closer to 1 in 1,000 if you look at all the prospects that are scattered around the world.
1 in 100 or 1 in 1,000 is big odds, for sure.
That's tough. So you really need to be careful in what you buy and understand what you've got early on.
And it seems to me that you get the euphoric response of investors sometimes. Again, fueled by cheap money is usually a good reason for things to get a lot of inflows. Mm-hmm. And that sort of makes your job as an analyst, as a person who's looking at the math, the nuts and bolts, the rocks and trees, trying to add things up and project what things are worth. I think that makes your job harder.
It makes it, in terms of selecting stocks to buy. I mean, I could lay out to you now a dozen projects that are going to be good projects. But the value that the market is placing on them is more than what they're really worth. So it's you've got to take that into account as well, for sure.
So how do you express that in your investment newsletter that you write? How do you account for that wild card, if you will, of these publicly traded markets kind of in manic phases?
I get right down to turning it, the rocks into money. I build geologic and financial models on projects very early on. Let's call it a gold project in Mexico. I can see where we have the potential to prove up 1, 2 to 5 million ounces. I'll run a model on that of what it's actually going to cost if they're successful to mine it, process it, that sort of thing, and come up with a net present value calculation, and then compare that to the current market cap. What that means is we're making a lot of assumptions, but the key in this sector, because we know that most of these stocks companies are going to start to find something. The chart goes like this. They're finding something, but we know in the end 90% of them are going to be back down here. So the key is knowing here when the project's not working or it's overvalued. That's the place to be. And that's what you really need to know, and that's what we try and do in the newsletter.
And do you ever speak about sells in your newsletter?
Yes, indeed.
Because once something achieves its target, like you're basically saying, if it was a rational market, this is what I think this share should be worth or trade for. And you realize, of course, that it's often not a rational market. So you would say, if it gets to this point, do you say, I think then it would be fully valued?
Yes, I sell.
Well,
it doesn't count till you sell, right?
Right. So what would you say is the hardest thing about giving people advice in this kind of a format where you've already said you're unbiased? You're saying, in my professional opinion, this is the valuation underpinning this particular sector or company. What would you say is the hardest part of doing your job well?
Probably the hardest part is that, because I'm basing all my decisions based on my financial situation, whereas I'm addressing an audience that I have no idea what their real financial situation is, what their risk tolerance is, what they're hoping to get out of this. So that's the hardest part, is trying to, I'm giving information to people. They need to judge it in respect to their goals and financial goals and that sort of thing. I mean, I hate to see some fella whose bank account has only got $10,000 in it put $10,000 on one of the things I buy, because these are really high risk things.
And with leverage, right?
Exactly.
What's your thinking on leverage as it applies to this particular sector? If someone's borrowing money, for example, to partake or using a margin account?
I would never do that.
It would be pretty...
It would, no, I don't use leverage. I'm a very conservative guy. I owe money on one thing, and that's my house. I don't like to go to leverage.
Right, and you're Americans, so far you get to tax deduct your mortgage interest, right? So far. So we're going to take a little break, and when we come back, I'd like to talk about some of the opportunities that you're seeing in your sector in particular right now. We'll be back in a moment.
You're watching The Money and Wealth Show.
Molycorp Gold Corp has substantial assets. Magnesium deposit, inferred 52 billion pounds. Molybdenum deposit, indicated 1.9 million tons. Inferred 1.8 million tons at 0.087% MO. Past silver producer, average 182 ounces per ton. Trading symbol, MOR. Website, molycorp.com. Or phone me, Larry Ray, at 604-531-9639.
The Money and Wealth Show is archived online at talkdigitalnetwork.com. Here's your host, Danielle Park.
So we're back with my special guest, Brent Cook, who's a geologist and exploration analyst. And before we went to the break, Brent, we were talking about the challenges of being a fundamental analyst, trying to figure out the actual math of what something or a company should be worth, and versus a publicly traded marketplace where all sorts of factors like euphoria in investors or depression in investors or margin and leverage use can really magnify the moves that we see in modern markets. So having said all that, I was wondering now, what sort of opportunities, we've talked about some of the risks, what sort of opportunities are you excited about in your field as you look forward right now?
Generally speaking, we're at a point in time where metal supply cannot keep up with metal demand. And it's a function of a number of things, but basically right now, on a global scale, gold production is in the order of 83 million ounces a year. Copper is 18 million tons a year. That's the equivalent of one Carlin Trend being depleted a year, and that's one of the largest gold districts in the world, and one Bingham copper mine, which is one of the largest copper mines in the world, being depleted. What that means is we've got to find one of those every year and put it in production just to stay even, and that's not happening. We can't do that because it's just getting tougher and tougher to find these things. It's getting more and more expensive to find these things, and we really don't have the people, the engineers, the miners, and that sort of thing, to actually bring that much into production. There's a slide I use in my presentation that shows we've got this many 400 projects potentially coming into production, but we can only physically build 20 a year. So what that means is that if a company is successful in finding an economic deposit, and by that I mean a high margin deposit, that is going to be very, very valuable. And we'll see and this is why I'm in the junior sector, we'll see a stock go from 20 cents to $2 to $25 even if they're successful in finding something that one of the larger mining companies will buy.
So it's interesting. So what you're basically saying that there's peak oil theory, there's peak copper theories, this sort of thing, but right now it's not so much a function of lack of availability on planet Earth, but there's constraints in terms of professionals and people that are dedicated and resources, the lead time getting into the mines. Those are the kind of constraints that are restricting the supply right now in the marketplace.
That is a serious issue right now, and in the crash we had in 2008-09, there were, I forget, something like 200 projects who were that were in the stages of being financed. That was put back another 2 years because they just, the money dried up, it didn't come in. So it was compounded during the financial crisis as well. And again, it's, you can't just go and find a deposit. The time from finding a deposit to production is minimum 5 years, more like 10 to 20 years if it's a large deposit. That's a lot of time.
Wow, so we're already sort of 10 years into this secular bull in this particular commodity cycle. So potentially we have another 5 to 10 years to go if history's a guide of how long these sort of build-out cycles take. So what you're saying is some of the deposits that we've located today will probably not be coming on stream in time for this particular demand cycle.
That's right. I mean, there's a deposit in Alaska, a great big deposit discovery. It was an old project. Someone, they refound it, retested it, and it got bigger. It's a huge deposit, but they're still going through permitting issues there. There's the salmon, the Salmon River that's an issue. There's the environmental issues. It'll probably be 20 years before that goes into production, if it goes at all. And these are the issues. And then you look at, if you find something in Ecuador or the Congo, then you've got the political issues as well. Is the government going to take that from you? What's the government going to do to it? It's not, a mine is a tough thing because you can't pick it up and move it if you don't like what the government does to you tax-wise or whatever. You're stuck there. So those are other issues that are slowing things down.
So that's an issue that people have been quite perturbed with in the last little while, like countries like Australia and what you mentioned there, changing their taxation laws or changing the amount that they require the mines to kick into the coffers. But that, I mean, you've been doing this 3 decades. That has to be a pretty common theme that comes about in these cycles, right? In the beginning, nobody's interested in the sector and there's not much money to be made and governments aren't that keen or interested on taking revenue from it. And as the boom cycle goes along and the companies finally reap the rewards of their investment, which they may have made 20 years before, suddenly it looks like they're getting windfall profits.
Yep.
And so you see that there's political risk around how much of it the companies end up keeping.
It looks like a company will, making all this money. Well, it took them 20 years to find this thing and build it.
Right, and a lot of entrepreneurial risk, et cetera, was put up front, and it looks like to everyone, when they become aware of the story, it looks like it was a cakewalk.
Exactly, it's not.
So the other thing I wonder is, I don't think much has been solved in terms of the financial markets crisis that, brought about all that headwind in 2008, 2009. And, to what extent do you think if we get into another round here of debt crisis, that's going to impact the business models of some of the companies that you're working on?
What the junior resource sector is all about risk, and this is very high risk. And what I've seen, and I'm sure you've seen it as well, is when people get scared, it's the riskiest sectors that get hit the hardest. So we're going to see, if things go bad, we'll see the junior sector, by that we can measure that on the venture exchange in Canada, go down quite a bit. And I'm personally looking forward to that because I know the projects that are good and I know the ones that aren't good. And if I can buy a good project, good money-making deposit for half price or less, that's perfect for me.
It sounds like a sale, and the trick of that would be to, of course, have liquidity, which would be have cash, right?
Yes.
You have to be able to be available to get access to those companies. You have to have some money. You can't have it all in on the way down. We'll be right back after this.
You're watching The Money and Wealth Show.
American Manganese Inc. has a manganese deposit in Arizona, indicated 6.7 billion pounds, inferred 8.9 billion pounds, potentially the lowest cost producer of electrolytic manganese. American Manganese Inc. has a projected cash cost of 44 cents a pound. The metal trades near $2 a pound. Do the math. Trading symbol AMY. Visit AmericanManganeseInc.com or phone me, Larry Ray, at 604-531-9639.
The Money and Wealth Show is archived online at TalkDigitalNetwork.com. Here's your host, Danielle Park.
Welcome back. And Brent, in closing, if you could let our viewers know where they might find you and your newsletter on the net.
Love to. My newsletter is Exploration Insights. That's also the URL where you can look it up. You can find me on Google. On my website, I've got a number of free articles, and there's actually a YouTube video link there where I was up in the Yukon evaluating a property, and I go through some of the things to look for. I think that's a really valid thing to watch to get a sense of what mining and exploration is all about.
Great. Thanks for joining us, Brent, and thanks to Agora for making this possible, and thank you for watching.
The Money and Wealth Show has been brought to you by AmericanManganeseInc.com.